Good morning, breakers, and welcome to a BTC analysis fresh from the press, so to speak. A new week has started, so let's look at the charts. I would say exciting times ahead, yet many reasons to be cautious as well. Why? Let's put on our monthly levels and then it will become quite clear why you can definitely be excited. The monthly downtrend has been officially broken with the close of our January candle. Now, the first thing you would expect, if this really is a new uptrend, is a new monthly higher low to form before more upside. However, where's this monthly higher low going to form if we get it? One level you might want to consider to be of bigger interest is the old all-time high. Obviously, where does that come in? At 19,892 roughly. So let's keep that in mind. I put it here on the chart and let's have a second look at it later if it bears any relevance for us. Also, looking at the monthly boxes, we see why we had such a strong bounce. We made it right inside of a monthly fair value gap here. Yes, we didn't tag the bottom. Nonetheless, there was a reaction to be expected. And don't forget, looking at a monthly chart, that it took quite a while for it to happen. Let's move on, zoom into the weekly chart. And again, we see that our weekly downtrend also has been broken, and a possible former resistance level at around 20,900 might now turn into support. Adding on our weekly levels, we also could mark out a fair value gap right here, so there really is a lot of liquidity to be filled in underneath us and also above us, which is why I'm still cautious. Yes, the chart tells me the weekly uptrend has started, the monthly downtrend has been broken. Chances for the bottom of BTC to be in are indeed high. At the same time, this, however, doesn't mean that you should just blindly long now, because look what we have above us. We have a weekly target box, bearish target box above us. Where does it come from? You just take your fibs, put them onto the chart from this latest lower high from the end of May 2022 down to our bottom and up again, and we see the 618 starts at around 24,690. The monthly liquidity that we have marked out as well falls at around 25,200, which is exactly where our weekly fair value gap starts. With that, you see there is not one, there are several reasons to be cautious. If we push up a bit further, then we should see heavy resistance. Being in a weekly uptrend now, having broken this lower high, however, we first of all want to be bullish and therefore mark out our bullish target boxes. Let me quickly get rid of that monthly fair value gap. We don't want to clutter our chart. And if we take our fibs from the low, put them up to the high, we see that there is one bullish target box starting at around 19,115. And if we take our fibs from where the move got really aggressive, so the start of January, then we see that 19,311 should come into play, or could come into play again, if this is our local high. Nothing there to say that we can't push up a bit further, obviously. Summing up the higher time frames, then what does that mean? We obviously want to be bullish, want to be looking in the long term for higher prices. However, higher prices normally come with a pullback first, and that would then be your possibility to position long either at around the now probably support level around 20,900. Remember, we have the old all-time high lying at around 19,932, and our target box is within a massive weekly fair value gap. Some of this could be or should be filled in at some point. However, if you are trading the lower time frames, you may expect another push to come up, get some more of this liquidity at around 25,200, 300 before we finally get the pullback to wherever it may go. With that being said, let's also look at the daily time frame to get a more actionable impression of what lies ahead in the coming week. And here it immediately becomes clear that all the liquidity lying around these daily wicks seems to be in play now, or seems to be attacked now. We are rotating back to the lower portion of this range that has formed between 23,820 and around 22,300, 400. So let's give this liquidity a number so we can set an alert as well. I would pick the low that we have here at around 22,500 and put my alert here. I want to be alerted once we get into this region, see whether we get a push up first or whether we look at a further decline on the daily, and just go through this liquidity. Obviously, just like on the weekly, we want to add on our target boxes, taking the fib, and we see that the first target box, if we pull our fibs from our latest daily higher low, come in at around 21,850. Looking at possible daily levels, we have the liquidity that we've just marked out underneath us and above us at around 24,280. Then obviously the higher low level at around 20,650. So with that, where does that leave us for this coming week? Well, I would expect the lows to be swept before we move up again to the highs of this range, meaning basically continuing to play this range. What you want to do is put an alert at around 22,500, put an alert up at the highs at around 24,280. See which one triggers first. At the moment, if you're looking at the midterm, there's nothing for you to do. However, if you go down to the lower time frames, so basically at least the 4 hour, it already becomes clear that we are rather in an area where you want to consider looking for longs than for shorts. All you can do is know your levels, set your alarms. Once the alarm triggers, be it to the downside or be it to the upside, you open up the charts, you look at price, you wait for your setup to trigger, and then you just simply take the trade and trust the probabilities. How do you look at price action at the moment? Do you expect us to sweep this liquidity before we push back up again? Comment below. Also, thanks for all the support you've given me so far. Really appreciate it. I like what I'm doing here. So if you want to help me, support me and help the channel, then keep subscribing. With that, have a great start into the new week and we will talk soon. Bye bye.